They have removed the 200k plus 20% consolidated relief allowance on your salary. Therefore, you will pay more tax. I read something like this on social media sometime in December 2025, and I smiled because it is not exactly wrong, but it only tells half the story. If you're new here, welcome. My name is Timmy. In the last episode of this series, we discussed who a taxpayer is, how do you know if you're one, resident versus non-resident taxpayer, where you pay your taxes to, a little bit about self-assessment, and a couple other things. So if you haven't watched that, I encourage you to take a look at that first. Today we'll dive deep into the new tax reforms and how it affects a salary earner. We are only focusing on a salary earner in this video, and then subsequently we will build on top of that. So if you're interested in this, stay with me, and by the end you should be able to understand how the tax on your payslip is computed. That's if you work somewhere, and what you're expected to do going forward to stay compliant. You have two responsibilities under the new tax laws as a salary earner, and this has always been the case. The only thing that has changed for a salary earner is how you calculate the tax you're supposed to pay, and then maybe the things you used to do before, the things you were supposed to do before that you didn't used to do. Now the new law has made it even more stringent, and you have to do them. So first, as an individual, it is your responsibility to calculate how much tax you should pay. Like, it's not the government that's going to come and say this is your tax. It is your responsibility. It's not your employer, it's not anybody else's, it is yours. Secondly, it is your responsibility to file your returns and pay the tax on time. Now, it is supposed to be once a year. I alluded to that in my last video, but because of, for ease and, to fund the government and a few other reasons, the payee system was implemented. Is a form of deduction at source, so that, it doesn't become a burden at the end of the year. So somebody would help the government remove a little bit of that portion of that money every month, and at the end of the year, you will calculate the taxes you're supposed to pay. Sometimes it could be more, sometimes it could be less. Then you go ahead and pay the difference or request for a refund for the difference. So again, you have two responsibilities as an individual: calculate how much tax you should pay, and file your returns and pay the tax on time. I think section 13 of the new tax law of the NTA specifically talks about payee. Section 14 subsection 3 mandates that you must file your annual returns, and section 32 says that any returns submitted on your behalf is considered to have been submitted by you, right? And if you look at the wordings of the new laws, what your employer is doing monthly is remittance. They are not filing, right? They are not really filing returns. Even your employer files employer annual returns at the end of the year, between the first month of the year. But what I'm trying to say in essence, is that it is your responsibility as the employee to file your returns at the end of every year, just as it applies to any other individual. So let's pick the first one. You've probably seen calculators and a couple of other things out there on how to calculate your tax. And this is probably the most popular aspect of the tax laws. And please note, let me just make this clear one more time. This is specifically for salary earners, right? Whether you're a civil servant or what have you, this is specifically for you. So the first thing you will do is you will take your salary, right? The salary you earned in the year from January to December. Then you will split it into, let me say, 5 buckets, right? You will split it into 5 buckets. Let me just say 5 buckets. Or 4 buckets, then everything else you put it in others. So you split it into basic salary, housing allowance, transport allowance, loss of employment benefits, and others. I'll explain all of this in further detail, but you just need to know you put it in 4 different buckets, and then everything else you put it in others. So how do you break it down? We will get to that in a bit. Now, the reason you need to separate it like this is for 2 reasons. There is a relief of up to 50 million naira for loss of employment benefits. So let's say you work somewhere, there was an accident, you were sick, the company gave you money, and they give you like 25 million. You're not paying tax on that money. Or let's say you lost your job in a company, but you spent like 10 years there. So they give you like a severance package, and it's like, 60 million. Out of that 60 million, 50 million is tax-free. You don't pay tax on, 50 million out of that money. So you only pay tax on 10 million. So you need to know which portion of your income is loss of employment benefits. And it could be 0, that's fine. Then the other 3 items, basic, housing, and transport allowance, they are the basis upon which you compute pension. That's how we calculate pension. That's how the laws have asked us to calculate pension. So let's imagine somebody, let's call the person Ada. Ada earns 7 million annually. So let's say she goes into her employment letter, and then she sees that she makes 7 million annually. So let's break it down like this: basic 2 80000, housing 1 20000, then maybe let's put others, right? Others 30000. And if you look at this, sum of all these numbers 7 million. So let's just format it a little bit nicely. Boom. Okay, so this person makes 7 million naira. This is what it says on her employment letter. Okay. It's good. Let's just. Okay, so this is what Ada earns. We've seen that now. Let me pin that. Blue. Right. So you've checked to confirm this is how much she makes annual. Please, when you check your salary, make sure that it is annual, right? It is the annual number you are checking. Now that we know that this is what Ada earns on an annual basis. So let's assume, to make this a little bit more robust, Ada's salary at company X. So let's say in the month of July, or whatever month, or which month is, I'm just trying to make the example a little bit more robust. So let's say she was laid off in March. So Ada was laid off in March 2026. March 2026, laid off. Okay. Now, when she was laid off, she was paid severance of 2.5 million. Right? So she was paid severance of another 2.5 million. So that's what happened in March. So which means this first salary would have been from, even though it is an annual salary of 7 million, she only earned it for January to March. Right? So she earned this January to March. Yep. Now, let's say she didn't get another job in, what month now? She didn't get another job in April, May, June. Then she got a new job in July. So in July, that got another job. But in this new job, the annual pay is maybe 9.8 million. So they just said 9,840,000. Let's use that number. Okay. This is what she earned in the new job. So let me paint that another. Let me give it another shade of blue. Okay. So this is what she earned in this is annual salary. Please beware, this is annual salary. Let me just put it here as well. So this is annual salary. Now, how does Ada calculate how much tax that she's supposed to pay? So the first thing you need to do is ask yourself, how much did you earn in the whole year? So if you calculate it, it would be January, or I'm thinking, how do you make it? We need to break it down into 5 parts, but we need to know what you earned in all those years. So we'll say, let's make it monthly. So let's calculate the monthly portion. So this would have been this over 12, this on 12, this on 12. Yeah? This is what she would have earned in this company monthly. Let's make that make sense. Okay, so this is what she earned in this company monthly. Yeah. In this is a one-time income, so it's one time. So it's just still 2.5 million. And this one, they didn't tell her the breakdown, so it's just that divided by 12, so 820. Yeah? Okay. So what she then needs to calculate is how much did she actually earn in the year? Annual income. So let's say annual income. She earned this money how many times in the year? January, February, March, only 3 months. So you multiply that by 3. She earned this one only 3 months, multiply by 3, multiply by 3. So from this job, the total money that she earned is 1.75 million. Right. So 1.75 million is what she earned from that first job. This one she earned 2.5 million. And this one she earned, that would be July, August, September, October, November, December. July, August, September, October, November, December. 6 times 6. Okay. So we can see what Ada earned throughout the year. The total income that she earned in the year is this amount here, plus this amount here, plus this amount here. This is like a complicated one. I'm just deliberately making it complicated so that, you know, people that might have this scenario know. But if it is straightforward, if your salary is from one company and it's straightforward, you just divide by 12 and you break it down like this. Now, remember I said we need to put it in 5 buckets. Yeah? So we already know this one does not have breakdown, right? The company did not pay pension, no pension, nothing, etc. This company, this first company, they did pension, they did everything. This second company, they didn't do pension, they didn't do anything. So this is how much Ada earned in the year. So how does she calculate how much tax she's supposed to pay? So let's get into that. It's pretty straightforward, right? So the first thing we need to do is we need to claim reliefs, right? We need to claim reliefs. So let's start by putting this together. I would say Ada's tax computation 2026. She's doing it, let's say she's doing it in February 2027. Okay. So she will come and say gross income, or let me put it this way: basic housing transport, or the loss of employment. Now, remember I said 5, so this is 1, 2, 3, 4, 5. So she's broken it down into 5 different parts. Then she would take the first portion. What's the total basic that she earned in the year? This money plus, yeah, that's all. Housing, just this one. Transport is just this one. Then other, because this company, they didn't do anything, right? That's all. Then loss of employment is this. So it still comes to this 9,170,000, right? So this is called gross income. Yeah. So this is Ada's gross income. Now that we know Ada's gross income, we then need to claim our reliefs. There are 7 groups of reliefs that you can claim. So the first one is NHF, or let me write it out in full: National Housing Fund. Contributions to National Housing Funds. contribution to national health, let me just shorten it, health insurance scheme. Yeah, contributions to national health insurance scheme, pension contributions, employee pension contributions, interest on loans for your house, let me put it like that, life insurance premium, you and spouse, rent relief, and then exemptions from chargeable gains. So there are 7 groups of reliefs that you can claim. Yeah. Let me make this look a little bit better. So income, and then we can move this here, but so it looks a little bit better. Okay, so this is the income. These are the reliefs. Now, National Housing Fund is a scheme managed by the Federal Mortgage Bank of Nigeria that enables Nigerians over 21 years of age to access low-interest mortgage loans, right? For buying or building houses, right? The value of the house you can buy and the mortgage loan that you get depends on how many years you have to retire, right? It really depends on how many years you have to retire. But for you to have access to this money, 2.5% of your basic salary is typically deducted. So it's like an expense the government allows. Any contribution you make to the housing fund is like an expense the government allows you to take off. But please note, it is compulsory for those in the public sector, like everybody in the public sector, all civil servants contribute to National Housing Fund. People that are not in the public sector, it's optional. And the rate is supposed to be 2.5%. 2.5% of basic. How do I make this? So let me call it 2.5% of basic. What do I do now? 2.5% of basic. Okay. So we know this is 2.5% of basic. So if she was contributing to National Housing Fund, she will come here and say this 2.5% of what? Basic. Only basic. Right? Only basic. So that would be 17.5 if she was contributing to that. So if she was contributing to the National Health Insurance Scheme, the one that she pays from her salary, right? That one is supposed to be 5% of basic. 5% of basic. But again, sometimes it is full amount, right? Like if your company is using Ilera Eco, for example, in Lagos State, and your contribution is like a static amount, it can be 15,000 a month, it can be 20,000 a month, and your employer is taking it from your salary, you will take that, you will put it there. But if you also have any other insurance that you are paying for, health insurance you are paying for, you take it out. So let's assume Ada uses National Health Insurance Scheme, so she's just going to come here and say 5% of also basic only. For your pension contributions, typically your employer contributes 8%, then you contribute 10%, right? So in Nigeria, you and your employer must contribute money into an account for your retirement. By law, that amount must be minimum of about 18% of basic housing and transport. It must be 18%. So in this case, our basic housing and transport for the year is like 1.75 million, right? oh, 1 million only. There's no transport. This is a mistake. I put this in transport. It's others, right? So this should have been 0, and then this would have been that plus that. You see, these are the little mistakes that one can make. So this is that plus that. Okay, yeah. So basic plus housing is just 1 million, and it's supposed to be 8% of basic housing and transport. So basic housing and transport is just 1 million. So that's supposed to be 8%. So 8%, all things being equal. If you have specific scenarios, you can, review that. So this is going to be BHT, basic plus housing plus transport. Okay, so basic plus housing and transport, that's 8%. So it's going to take 8% of basic plus housing plus transport. Right. Of course, this can be way cleaner and it can look way better, but it's just the rough work, so you can see what this whole thing looks like. So now that you know the relief, did you take any loan? Right? If she took any loan in the year, she's going to remove this. So let's say that they gave her a 15 million loan and then she's paying 10% a year, and in this current year the total interest she paid is 1.5 million. She can put the 1.5 interest only, not the total amount she paid, interest portion. So let's say she didn't take any loan, so this becomes 0. Life insurance, people don't do insurance in this country, but if she paid for insurance for herself and her husband or something, you can put it here. Then rent relief. So this rent relief is straightforward. So let's do the calculation somewhere here, and then we'll put the amount here. So let's say our rent in the year is rent of, say, let's say she pays 2 million a year, right? Our rent will now be 20%, or let me make it maximum. It's going to be, let me do it outside here, then we can compute it, and we can compute it in this box later. So she will first calculate 20% of the 2 million. You see, it's 400,000. Because this 400,000 is less than 500,000, let me put max 500k. Okay, so because this is 400,000, she's always going to put 400,000 here straight, this 20%. But if this money is more than 500, so let's say our rent is 6 million. If our rent was 6 million, see, this money is 1.2 million. So the relief she will get is 500,000. So let's bring this back to 200. So how do you do it in Excel? So it's going to be the minimum of 20% of 2 million and then 500,000, right? So that's our rent relief. Exemptions from chargeable gains. Exemption from chargeable gains. So there are a few things where if you make money from it, you will be, the government will give you money back in a way, or it is tax exempt. So I'll give you, so an example is compensation for loss of employment. This loss of employment portion that I was talking about. So let's say they sack you, then they paid you for it, or injury during employment. All of that, is part of chargeable gains. There are other ones, but because this video is specifically for someone that earns salary, you just put it here. So the only one that is present in this case is loss of employment, and in this case it is maximum of 50 million, right? Maximum of 50 million. So in this case, what did she, loss of employment for her is 2.5 million. So it's either the minimum of 2.5 million or 50 million, right? So which is 2.5 million right now. Total relief, if you sum everything together, is 3 million 0 blah blah blah. If you could put this number together, you can now compute how much is taxable income. This is the amount that you will charge ADA tax on. So ADA's taxable income is now going to be this amount minus this amount. So 6,137,500 is the amount they are going to charge ADA tax on. So let's take it a little bit further. So typically, right, what your employer does is that they will take your money ahead and they will try and assume how much you would earn over the year. Then they will calculate your tax annually like this, so annually. Then they will now divide it into 12 and then remove it monthly. So then we go to that table. Remember that table where they say first 800,000, this one is 0%, first, second, so thousand. So let's go to fiscal reforms website, presidential fiscal committee. I think, yep. Resources, I think. Where's the calculator? I'm always missing where it is. Yeah, there we go. Okay, so let's just, it's the rate I need. Of course I can put it there, but I just want to make sure that you see it for yourself. So first 800,000 at 0%. So let's copy it one by one. First 800,000 at 0%. So you come here. First 800,000 at 0%. So what you will now do is this. How much is your salary? How much are you supposed to pay tax on? 6.137, right? So you will now take 800,000 inside, right? You take 800,000 inside. Why are you taking 800,000? Because this amount is more than 800,000. So you take 800,000 inside. So let's take 800,000. Let's say this amount is 800,000 or 750,000. What will you take? You take only 750 here. So you take the first 800,000 at 0%. First 800,000 at 0%. First 800,000 at 0%. So when you times it, now if you look, how much is left? It's 5,337,500. I hope this thing is clear. Then you will now go, what's the second rate? Next 2.2 million at 15%. Next 2.2 million at 15%. So is this remaining balance up to 2.2 million? Yes, you put 2.2 million here. 2,200,000. At how much? 15%. So if you charge 15% of this 2.2 million, that's 330,000. Yeah? Okay. Just making. Okay. So you now remove this 2.2 million again from the balance. So it will be 5 million. It will be this 5.3 million here. Then you remove this 2.2 million because you have already taxed 2.2 million. There's still a whole 3.137 million left. Let's go back to the calculator. It says next 9 million at 18%. Okay. So next 9 million at 18%. You now put it. Now, is this up to 9 million? We cannot charge 9 million. We only have 3 million. And we'll now take the remaining 3 million because the amount that is left is less than the total amount that you have here. And then that is what rates 18%. So you will now take 18% of this amount. So when you do that, 564,000. So you will now add all this money together. That's the tax you're supposed to pay. So if you look at the total here, it is, if you look at the total here, we have taxed the taxable income. And how much is the total tax? It is 894,750. So 894,750 is tax. So total, let me put it here, total tax 894,750. Now we know how much that is supposed to pay, but she's an employee, so our employers have removed some taxes from her salary so far in the year. So let's say we will now go back, she will now go back to this company and check how much did they remove in January. So company X removed whatever amount in January. Whatever amount you want, know how much they removed, because that's the only way you can be sure. So they removed 30k company in January. In February too, they removed 30k. In March, they removed 30k. This new company did not remove any, they did not even used to pay tax at all. So Ada will now come. She will now remove this 90,000 that this company has removed. She will now go to our state government, and then she will submit this thing to them. Total tax she will pay is now 804,750. Now this is how Ada would know how much tax she's supposed to pay at the end of the year, between January and March 2027. So I hope the calculation is not confusing. I hope the calculation is not confusing, but yeah, that's how you calculate your tax. Now, if your employer doesn't know, all these details, so let's say your employer did not calculate, let's say your employer doesn't know your rent, so they did not include your rent in the computations. So look at what happens. Your tax, when your employer computed your tax, they may have gotten 966, and then they will charge you 80k every month. So when you do your own computation and you see that, oh, your employer has charged you, that means you have paid extra by the end of the year, you can request for a refund. And most times, if you move jobs in a year, you move from a lower salary to a higher salary, there's a very high likelihood that the tax that your employers would have removed when you combine everything together would have been more than the tax that you are supposed to pay. So you are supposed to claim refunds. So I hope this, explains it. I know it's a rough sheet, but yes, I hope it helps you understand how to compute your taxes as a salary earner. So now that you know how much taxes you're supposed to pay, your taxes should be paid to the state you live in, and you're supposed to file your returns to that state latest by the 31st of March every year for the previous year. So for example, 2026 tax returns will be due by 31st of March 2027. Don't just rely on your company. The law requires you to do your part. And I hope these explanations helped you and you now understand what you're supposed to do at the end of the year as a salary earner. What if you work from home for a foreign company, or you're a freelancer, or you have salaried job, but you also have something else that you're doing? The next video is for you. See you on the next one. Thank you.